Markets are at all-time highs. Almost every major stock feels overextended right now and earnings season is back. So here's the big question. Will these earnings report break this rally and trigger a pullback, or will they push the markets even higher? In today's video, we'll dive deep into major banks and financial stocks reporting earnings this week. I'll analyze their fundamentals, technicals, and share 1 year and 5 year price targets and discuss my predictions using a strategy inspired by Peter Lynch, one of the greatest investors of all time. Also, I've created a spreadsheet tracking all my stock predictions so far with my price targets and even my personal returns. You'll find the link in the description below. So make sure to save it for future reference. Before we dive in, I'd really appreciate if you can like this video, as YouTube will try to push it to more people and it will be beneficial for everyone to watch and grow with us. And also, please consider subscribing to the channel. Alright, let's kick off with JPMorgan Chase. Ticker symbol JPM. At the time of this recording, JPMorgan Chase is trading at $286, sitting right on its 13-day EMA. Using my model, combining current EPS, current PE ratio, and expected annual EPS growth rate, I predict a 6% upside in 1 year and about 33% upside in 5 years. But here's my concern. With platforms like Robinhood and SoFi offering better interest rates, retail investors are pulling deposits away from traditional banks. This trend could hit their revenue streams in the long run. So, in my opinion, there's more downside risk than upside with all traditional banks right now. Next up is BlackRock, ticker symbol BLK. BlackRock is also trading at its all-time highs, but technically the price is diverged far from its EMAs and RSI is above 80, a clear overbought signal. And I expect this earning season could bring the stock back to the $1,050 range. And fundamentally, though BlackRock looks better than JP Morgan Chase, showing 11% upside in 1 year and 66% upside over 5 years in my model. Now let's talk about Citibank, ticker symbol C. Citibank is also trading at its highs with RSI at 68, but fundamentally, this one excites me more. My forecast shows a 18% upside in 1 year and 125% over 5 years. If we see a pullback after earnings, I'll be watching closely for a potential entry. And don't forget, you can find all these predictions and price targets neatly organized in my spreadsheet. I've even included price target sheet and stock prediction sheet to help you track them all. The links are in the description below. Moving on to Wells Fargo, ticker symbol WFC, again trading at its all-time highs, and my model predicts a 10% upside in 1 year and 64% over 5 years. It's solid but not a screaming buy at these levels. I wouldn't touch any company which shows less than 100% returns in 5 years. Now let's check Bank of New York Mellon, ticker symbol BK. Similar setup, trading at its highs but showing 14% upside in 1 year and 90% upside over 5 years. I'd wait for a dip here too. On Wednesday, two big players are reporting their earnings, Goldman Sachs and Morgan Stanley. Goldman Sachs fundamentally it looks strong with 17% upside and 116% upside over 5 years. But technically, I'm seeing signs of downside risk. The similar setup with Morgan Stanley as well. This one is little interesting. I see slower growth here, only 12% upside in 1 year and 79% over 5 years. Both RSI and MACD are signaling a potential pullback. Personally, I wouldn't touch this one before earnings. Again, all these details are in my stock prediction spreadsheet. Take a look and let me know in the comments if there are any other metrics you'd like me to add to it. And finally, on Friday, American Express, ticker symbol AXP, is reporting their earnings. And my model shows a 14% upside in 1 year and 88% in 5 years. Technically, though the stock looks overbought, and I expect it could pull back to around $300 range after earnings. So to wrap up, most of these financial stocks are at all-time highs with RSI readings in overbought zone. Out of all these bank stocks, Citibank is the only one I'd be interested in right now. With an impressive upside potential of 18% in 1 year and 125% over 5 years, I'd definitely be looking to add if there's any meaningful pullback in this stock. This earning season could be the trigger for a pullback, and that might create some great buying opportunities. Don't forget to check out my stock prediction spreadsheet in the description. I update it regularly and it might give you fresh insights into your investing journey. What's your take? Are you holding financials into earnings or waiting for a pullback? Drop your thoughts in the comments below. Please like this video and consider subscribing to the channel. It really helps out and motivate me to create more in-depth content for you. I truly appreciate it and thanks for watching and I'll see you in the next video.